Hi, welcome back to Investor Insights, and in this video I'd like to talk about Japan. I'd like to talk about the yen. First things first, Japan is in a lot of trouble. Japan's been in a lot of trouble for 25 years. This all began a long time ago, when Japan had a housing bubble, which led obviously to an investment bubble and a stock market bubble, obviously. And when the whole thing imploded back in '89, everything hit the fan, and it's never recovered. The Nikkei almost touched 40,000. Recently it fell as low as 6,000. And even today, with Abenomics going on, the Nikkei is at 14,000. Now imagine investing your money in a Japanese index fund 25 years ago. It would still be 2/3 down today. And I think you're going to wait a hell of a long time to see your break-even point. And that's not even taking into account the currency movement, nor taking into account the effects of inflation within your own country. Since this implosion in Japan in the late 80s, Japan has been mired in deflation. Now, I've discovered deflation in another video, but deflation is more or less a state of mind. Hear me out first. Yes, deflation is when you have falling prices over a given length of time. In Japan, it's been 25 years. That is a number. It's true, it's real, it's not just a state of mind. But I'm trying to discuss the effects of deflation and how it spirals, and then it just becomes a state of mind. When you live in a society that's basically been overrun by deflation, it's very hard for you to spend money. Japan is the only country in the world where cash is probably the best asset class to invest your money in, or to put your money in, I should say. Anywhere else on the planet where you have inflation or hyperinflation, if you put money in the bank, you put money under your mattress, inflation's gonna wear out its purchasing power, and over time it becomes worthless. In Japan, money under your mattress has got more purchasing power over the long term. How scary is that? Because you've got falling prices. Now, I'll get back to that state of mind thing. The mentality during deflationary time is this. If you were going to buy a house that was worth $500,000 today, but you knew that that house is going to be a tiny bit worth less the following year, are you going to buy that house? The answer is no. Now next year, if that house is worth $499,000, but you knew that the following year it would be down again just a tiny little amount, are you still going to buy that house? The answer is no. Repeat this for 25 years. And that's where you have Japan. People don't want to spend their money on hard assets because those assets are constantly losing value. And therein lies the problem of deflation, and how I believe that it's a state of mind. To get out of deflation, it's simple. You got to get your population to spend money and stimulate inflation by creating demands for goods and services, especially expensive goods, looking at real estate, looking at cars, looking at anything of value. It's not happening. That's just a brief history of what's happened then. Since then, they've had many different prime ministers. They've had many Bank of Japan leaders. They've had different strategies to try and combat this deflation, and none of them have succeeded. But this Abe guy, since last December, has stated that he will go to all lengths to create inflation. And his target inflation for Japan is 2%. Now, to go from a country that's been in deflation for 25 years to a state of inflation of 2%, it's going to take a lot of work. It's going to take a lot of convincing. But he's not going to do that. He's not going to change people's mentality. What he's doing is turning on the printing presses and running them quadruple time. And he wants to artificially create inflation. He wants to devalue the yen. This in turn is going to help the exporters. This in turn is going to help bring confidence to the people, because people are willing to travel to Japan and spend money in Japan because of the weaker currency. Sounds good, doesn't it? With every action out there are consequences. And sometimes I think these governments and central bankers are freaking clueless. By weakening the yen, yes, you help your manufacturers, you help your exporters. But the flip side of the coin is that Japan does not produce any primary goods, any resources of any kind. So what that actually means is that if you're a manufacturer, yes, your goods will seem really attractive to the rest of the world because the yen's fallen, 20%? Actually, it's 79, 20. We'll say it's 25%. But you see, your country doesn't produce any of the resources that's required to produce those goods. So what happens? You've always had to import them. So now your input prices are 25% higher. So therefore, you're back to square one. A lot of people don't think about that. Yes, what they've got right now they can sell at current price, and with the currency fluctuation, they're going to do really well out of them. But next time around, they have to raise prices, simply because the cost of their inputs have gone up 25%. Well, Mr. Abe, obviously you didn't think. But maybe he's thinking that there's going to be a miracle out there and the Japanese people are just going to jump in and just start spending because the confidence is at an all-time high. This is an illusion. This is going to end in tears. But something has already happened which has made Japanese people very unhappy. And that was 2 years ago. The huge earthquake and the subsequent shutdown of Fukushima reactors. The Fukushima nuclear power plant. And the subsequent shutdown of every single nuclear power plant in the country. This problem has led to Japan being a net exporter, so to have a positive balance of trade figures, to now being a net importer. Because, as I've said earlier, Japan doesn't produce anything. Doesn't have oil, doesn't have coal, doesn't have anything. So if the majority of its power needs were satisfied by nuclear power stations, which are now shut down, Japan's got to import all of its energy needs. It's got to buy coal, it's got to buy more oil. And guess what? The yen is down 25%. The cost of those assets, of those commodities, are therefore 25% more expensive for its people. Energy prices have surged in yen terms without really having any extra demand, just on the currency fluctuation alone. And a double whammy has occurred when you actually look at the actual Japanese, not just energy crisis, because of the fluctuation in currency, but the surge in price of these energy commodities worldwide. So the yen has fallen 25%. The cost of all these commodities to the Japanese people is now 25% dearer. But on top of that, you've got oil, which is West Texas Intermediate, has gone up 15% in the past month and a half. I'm talking $93 to now $108. It's a big moves. So you've got energy prices based on currency fluctuation, which have gone up 25%, and you can add another 15% rising cost of energy just because the commodities have gone up themselves. So technically, energy prices for the Japanese people have gone up, theoretically, 40%. And the problem with energy prices rising 40%, it's okay if your wages have gone up, but technically there's been no wage growth in Japan for 25 years. How can you have wage growth with falling prices? You'd be lucky to be able to keep your wage constant. So not only is Prime Minister Abe contributing to Japan's demise by causing all these weakness in its currency, but not a lot of thought has gone into the effects on its own people through just energy costs alone. Now, if you're a Japanese person right now, filling up your car is costing you 40% more than it did 6 months ago. Japan's a cold place. The heating bills have gone up 40%. Everything is surging in price. Because oil prices, as I always say, affects everything in life. So, Prime Minister Abe, be careful what you ask for, because you might get it. You wanted inflation? Yes. You want 2% inflation? Alright, you got it. But you know what? You're not going to get 2% inflation. You're going to get 25% inflation. And then you're going to have to try and fight that off. Good luck to you. Now, this then leads me to the yen itself. And as sure as the sun is going to rise in the east, the yen is going to fall. And it simply goes back to the old principle of scarcity bringing value. If you don't have a lot of something, that something's going to be worth a lot of money. But if that entity, man, is falling out of the sky, it's worth nothing. And right now, the Japanese printing presses are running so hot. there's only one direction for the yen, and that's down. So just as an idea for a trade, and in the long term, you're going to make money on this. There may be ups and downs, but there's a lot of money to be made, and that's shorting the yen. More specifically, going long dollar yen. Don't forget it's an inverse relationship. What's the target? I don't know. What? 30 odd years ago, dollar yen was trading at what? Just under 300? Recently, it got as low as 75, and now it's in about 100. This yen could fall another 50%, no problems. Just depends on how crazy these printing presses are run. So the outlook for Japan, it's grim. The outlook for the yen, it's grim. But with every event that goes on out there, there's a chance to profit from it. How? That's the whole point of Investor Insights, to give you an opportunity, to give you chances and insights into economic events or situations so that you can make some money out of it.